Well, Canadian consumers, Canadian travelers, and Canadian investors always have their eye on this graph, the value of the Canadian dollar versus the U.S. dollar. It's been under pressure for months, as you can see, a steady decline since the fall, taking it now below 70 cents U.S. for only the fourth time since the mid-1990s. It briefly surged by almost a cent U.S. on Monday, following news regarding the planned resignation of Prime Minister Justin Trudeau as the leader of the Liberal Party and, of course, by extension, as Prime Minister. For more on what a new government could mean to the Canadian currency, we're joined by an expert and one of our regular guests. Karl Schamotta is Chief Market Strategist at Corpay, and he joins us in studio right now. Thanks, Karl, for coming in.
Absolutely. Great to see you.
How much are politics in Canada affecting the U.S. dollar, and are they a sustainable factor in the future path of the loonie? Politics being the uncertainty regarding the future leadership of the leader of the Liberal Party, and certainly the heavy potential for a new government to come the spring.
Not at all. To be perfectly blunt, I don't think that the impact of Trudeau's resignation has really been priced into the Canadian dollar. I don't think that was the big driver that actually played out on Monday. What was really happening is that tariff threats and the potential for a narrower set of tariffs were boosting global currencies against the U.S. dollar on Monday morning. That, of course, reversed. Later Monday, after an article in the Washington Post was sort of debunked by Donald Trump later.
Right.
But basically,
that article, just to back up, suggested Trump is not going to walk back his tariff threats and would impose 25% tariffs on day one. Is correct? Is that what the Post
So
reported?
The Washington Post interviewed some of the people within Trump's cabinet and advisors around him, and they said we're looking to impose a narrower set of tariffs on like strategic imports, right? So commodities, defense products, medical products, things like that. And so markets surged as a reaction to that, given that, this might mean that there would be lower inflation in the U.S., that the global economy would be in better shape, all of that. And then Trump hit Truth Social about 3 hours later and said, you know what, no, this is nonsense. It's fake news. I'm going to go ahead with this. And of course, as you've seen today, just a couple of hours ago, we had an article in CNN or by CNN saying that Trump proposes to impose universal tariffs. And so all of that is leading to, that sort of broad-based decline in currencies relative to the dollar. Now, but if we think about Trudeau himself, right, and the political dynamics, the big issue here is that markets had long anticipated a leadership change. The fact that he has resigned has not dramatically shifted that calculus. We might get an election a couple of months sooner than we would have otherwise. But the reality here is that markets are anticipating a change in leadership, a conservative victory, and eventually, a more balanced relationship potentially between Donald Trump and the Canadian Prime Minister.
Are markets assuming a conservative victory would mean meaningful changes in economic policy, more market-friendly economic policies?
Yes, it does seem as if that's the case, and I would expect that increases a little bit once we have clarity, once that victory is truly priced in. But at this point, markets are poised to welcome a conservative victory. And, potentially one of the big sort of, I guess, wild cards here is that given that, Pierre Poilievre and Trump are right of center on the political spectrum, that they might get along a little bit better, right? And markets are sort of ready to push the buying button in anticipation of that. We don't know really whether that'll actually be the case. The reality is that, relationships with Donald Trump are highly volatile and can reverse pretty easily. But at this point, the market assumption is that, this should limit Canada's, liability in the event of a universal tariff scenario.
All of these factors, I guess, a more market-friendly federal government in Canada, tariffs high or tariffs low, that debate, all of them seem to flow into what really affects the Canadian dollar, and that's interest rate decisions by the central bank in this country versus interest rate decisions made by the Fed, correct?
That's right. And yeah, I think that's, if we were really to look back at why the Canadian dollar is falling right now, it is the level of indebtedness held by Canadian households. It's the fact that, debt burdens have risen, debt carrying costs have have risen as the post-pandemic monetary tightening cycle has hit home. That has put Canada in an incredibly vulnerable position going into this environment of heightened uncertainty, right? So all of that created the vulnerability, and then Donald Trump has, essentially lit the match that exploded the bomb here. And so the reality is that, we were in a weak position, but now daily movements in the Canadian dollar are primarily being driven by, news out of the White House the incoming administration, perhaps I should say there. And the reality is that that's very, very unpredictable. We don't know which way it's going to go at this point.
Do you have a target on the Canadian dollar over the next, let's say, 6 or 12 months?
I'd say no. The reality is that we could see a slip of 2 to 3%, maybe 5%, if we see a tariff applied that is on the scale that Trump threatened in November, but we don't think that that's very likely, and we do think the Canadian dollar would gradually grind back toward the end of the year based on the fact that the Bank of Canada has eased policy dramatically and has given households more breathing room. So we might see, a lift in consumption and a slowing in the U.S. economy simultaneously, which helps to boost the Canadian dollar's value.
Would history suggest that we're roughly at a bottom now? Again, since the mid-1990s, the 4 times the loonie has dropped to sub 70 cents. Was that suggest that almost on a technical basis that there's support at these levels?
It does. I think you could go about 2 cents lower in order to really hit that low, because we have seen repeated tests of that level over the years. But typically, what I would say is the contrarian signal is when we see a lot of headlines in Canadian newspapers saying that the Canadian dollar is going to 160 or below. So another 7% lower. When we see that kind of thing happen, then we're poised for a turnaround. Don't think we've reached that yet. Think it'll take until post-inauguration day before we really see that.